Good afternoon, and thank you for joining the presentation of Touax 2024 annual results. Our speakers today are Fabrice Walewski, Managing Partner, and Thierry Schmidt de la Brélie, Managing Director, Administration and Finance. Please note that you can ask your questions through the chat of this webinar. They will be answered at the end of the presentation. Fabrice, you can start.
Thank you, Vincent, and hello to everyone. So just to start, a few information first on the group. So the company, as you know, is a global player in the leasing of sustainable transportation equipment. Three asset classes, which are very standardized: containers, freight wagons, and river barges. Today, the company manages 1.3 billion euros of assets. We have 243 employees. It's a global presence on the 5 continents, and we often have the questions about the size of the markets where we are, quite large. In fact, the container assets today, they are 58.4 million containers in the world, and they transport 53% of all the freight, all the cargo by value in the world. So it's very significant. This is the most standardized transportation asset today in the world. Then we have the barge business, 30 billion euros of assets. You have 6,000 barges in operation in Europe and 25,000 in the Americas. And then rail cars, so we are 2 segments, 2 markets, Europe and India. It's approximately 1 million wagons on both markets. On next page, you see again this activity is really at the heart of the real economy and sustainable transport. It's quite resilient. You know, e-commerce, logistics have been quite resilient. In 2024, so Thierry will present you the figures, but has been quite a good year. In fact, when you look at the development of the containerized traffic, eliminating all the impact of the Suez Canal closure, so only to look at the number of containers transported, it's plus 5.9% in 24, and even the trade, as calculated by the World Trade Organization, was doing plus 2.7%. So quite a good year in 2024, despite, as you know, 2 wars and trade disruptions. On the next page, you see that we are our assets today, transportation assets, are in fact low carbon transportation assets. You have here very interesting statistics on the number of grams of CO2 issued by trucks, 137 grams, and for the equivalent transport, it's only 24 grams when you do it by rail, 33 grams when you do it on river, or only 7 grams when you do it using containers on a very long distance. Something interesting to note also is that leasing is a circular, participate to a circular economy. So we do optimize the usage of the assets for our customers. Talking about ESG on the next page, in fact, 2024 has been quite a good year for that. We have ratings, as you know. Extra financial ratings. We have 2, one from EcoVadis, which is more used for our customers and suppliers, and one EthiFinance, which is more used by our banks and shareholders on the financial market. So both ratings are quite important to different customers or people looking at them. We have a gold medal for the 2nd time for the EcoVadis. We are in fact part of the best 2% among 150,000 companies rated by EcoVadis. And then for the first time with EthiFinance, we obtained a gold medal, so first year, and we are in fact also on the top list, and among 70 companies which are in the transportation subsector, we are the #1, and we will continue to develop these ESG strategies. Next page is a summary of our platform. So Touax is a group. We own 3 leasing platforms. Each of them is dedicated to one assets So very specialized. We have Touax Rail for the leasing of freight wagons, number 2 in Europe for intermodal wagons, number 2 in India also for all type of general freight cars. This subsidiary is 51% owned by Touax and 49% owned by CVC DIF, which is a very large financial company involved in infrastructure. You have then Touax River Barges, number 1 in Europe and in South America. And then you have Touax Container, number 1 in Europe, for the leasing of containers. It's a total of 1.3 billion of assets, including 54% owned assets. Here you have a very good summary of how we do generate our revenues. So a leasing platform will always generate 2 revenues in a traditional business model. The first one is leasing revenues. It's normal. We invest in assets, we put them on lease, and so we collect leasing revenues. And it is a total of 87.3 million euros. And then it is completely normal at the end of the economical life of the assets or at the end of the lease to sell the assets. And then we generate sales revenues for 65 million euros. Then we added some services, of course, around that main business model, which are trading of assets or maintenance of assets, and also management of assets on behalf of third parties. And this is here what you see on the second part of this graph presentation. We have, in fact, 13 to 15 years management agreements with investors, third-party investors. They co-invest with us in the same projects. And here we generate an additional contribution to the EBITDA, which is 12.5 million euros of management commissions. On the next page, you see who are our customers. So here we only indicate a few where we have more than 20 years of business relationship. So for rail cars, definitely the end users are the national railways. They used to be, enjoying a monopolistic situation. After the liberalization in Europe or India, by the way, they started to rent assets to also have flexibility. So you have people like DB, Deutsche Bahn in Germany, but SNCF, the French railways, or Rail Cargo Austria, or CFF in Switzerland. You have also the private railways, companies like Freightliner. Sometimes they are very big and listed. This one in the US, or Hupac, owned by some regions, in Europe. It's a Swiss company. And then you have, of course, all the industrial companies. We only name here a few, but like Tata Steel. River barges, you will see mostly logistics companies and industrial companies. So Cemex is a very large customer of us. We transport a lot of sand and gravel, on the Seine River, for example, for them. On our barges, you have also people like ArcelorMittal for steel products, and then you have ADM, for grain or fertilizers, and then you have all the others like Imperial Logistics or Miller or P&O, who are very large logistic companies. Then you have for the container business, the main users for those containers are the shipping lines, because most of them are used, of course, to transport cargo on ships, but again, containers can be then also transported by rail cars or on trucks. But our main customers today are really the large conglomerates involved in shipping, like Hapag-Lloyd, Maersk Line, CMA CGM, MSC, or Evergreen. So again, to summarize this introduction, our business model is quite simple. It's like investment in real assets related to transportation infrastructure. So we invest in only real assets, standardized and mobile equipment. They are very long life assets, so it's very interesting because you can continue year after year to grow the assets under management and then increase EBITDA. They are very low obsolescence. The risk of obsolescence is very low for those assets because they are highly standardized, can be used by many customers, and highly regulated. Because for containers they need to be transported on rail, transported on every ship. So you have ISO norms, so highly standardized. And then we can deploy a strategy of multi-year leasing contracts. building a recurrent income. Our levers to create value is then to have a good diversification in terms of first ownership and management on behalf of third parties. That's why half and half more or less is owned and also managed. We are also quite well diversified geographically. Again, North and South America for barges, Asia and Europe for rail cars, completely international for containers. Quite strong competitive position, at least in Europe, where we are always number 1 or 2. And those levers create, again, a recurrence in cash flows and revenues. So when you look at the numbers, in fact, on January 1st, 2025, we already have 78% of our leasing revenues, which are secured because they are under contract, because we have long-term contracts. And of course, the performance, the target is to deliver a shareholder's performance, which is a combination between an appreciation of the NAV per share and a dividend. I will come back to that later. Thierry, I'll let you now present the financials for the year.
Thank you, Fabrice. The figures for 2024, so we can see here an increase in operating profitability, increased by about 8 million euro in revenues or restated revenues, 3.6 million in EBITDA, and that means an increase about 8% in the net income group share. So the growth in EBITDA is in line with the restated revenues from activities, stable EBITDA rate at 35.7%. Between EBITDA and net income, for sure, there is two major type of charges, which is depreciation. We do own assets, so we depreciate the asset over their useful life, and financial expenses, interest, because we do finance those assets. One word on the restated revenues. So we do restate the revenues to make them more understandable. The norm, the accounting norm, the present revenues for asset management or gross revenues or net revenues. What we do is just present here the asset management in net of expenses. Operating EBITDA, so something new also. In fact, is exactly the same as before, where we were speaking of EBITDA. But the French and European SEC consider that EBITDA should include exceptional items or discontinued activities, so that we do not include that. So that's why we had to change the name only. So it's exactly the same calculation or the same numbers as before, but we just change the name from EBITDA to operating EBITDA. A last word on the restated revenues. So this is a presentation restatement for revenues, and this presentation has no impact in EBITDA or in net income or this kind of profitability figures. So if we look in details for this income statement, we can see the turnover. So where we have leasing activity of our own equipment, which is decreased by 4%. Sales activity increased by 14%, and management, asset management, which was quite dynamic, so increased by 37%. Interesting to see that, in fact, the game of the diversification is working very well. In terms of leasing activity, the decrease comes from mostly ancillary activities. In leasing activity, we do have the lease revenues, but we do also have ancillary activities, such as affreightment, chartering for river barges, or maintenance for rail cars, and we will see later that these two ancillary activities decreased. In terms of operating EBITDA, so we can see that the increase in the operating EBITDA comes mainly from the performance of the management activities. Depreciation and impairment, there was no impairment, there is only depreciation. There is an increase in depreciation because we do have invested in 2023 and 2024 in new equipment. We'll come back on other operating expenses. Financial results, so which is mostly the financial expenses, which increase or decrease because its expenses by about a little bit less than 1 million, from 21 to 21.9 million. So did come from interest rate, but mostly from the volume of debt, because we do have increase, and especially in India, in the railcar activity. And then you have this net income from discontinued operation and this other operating income expenses. So other operating income and expenses 0.4, net income from discontinued operation 1.5. Those are quite exceptional items. So this is the things that the I would say French and European SEC want we put into EBITDA. So that's why we rename the EBITDA into operating EBITDA, because we do not account that in the EBITDA. The net income from discontinued activities come from an additional payment for the sales of the modular building activity we've done in 2017. There was some litigation. The litigation has been closed, so the guarantee is off now, and then we receive this additional payment. The other operating income, it's a favorable settlement for the foremost dispute we had in the United States in the modular building activity also. We had this in negative in 2023. If we look in the details now and the breakdown by activity, we can see that we do have the freight railcars, river barges, and modular building activity, which present a growth in operating EBITDA, where the containers division is slightly decreasing. In fact, the containers division is decreasing due to some customer bad debt provision we've taken. We had a bankruptcy from a customer that impact all the industry and impacted us. But you will see that the later the normal activity was quite good in containers also. So this showed that in fact again the diversification play well in our figures. Fabrice, I let you present the activities.
Sure. So first on the railcar activity, so 2024, the activity is really leasing general freight wagons. So we have a very limited number of tank wagons. 99% are in fact intermodal wagons transporting containers or semi-trailers. So we work with logistic companies and ports operators. We also have wagons to transport palletized cargo. So, for example, we did transport in 24 50% of the Evian water for the Danone Group. We have also a wagon to transport automobile or spare parts of automobile. And here it was a very active year in 24, for example, companies like Volkswagen or other logistic companies involved in automobile transports. We have hopper cars to transport cement or grain or iron ore, and working for people like ArcelorMittal or Tata. The fleet is 11 years old in average, with young fleets compared to what is in operation in Europe. A good visibility because we have 4 years of contracts. The asset is deployed, when you look at the number of wagons, 85% in Europe, 15% in India. But India, with 15% of the fleet, is almost at 30% of the EBITDA of the division. And when you look at the KPIs, also here you see the utilization rate, which is 86%. In fact, it's a little bit down. So in 2024, we saw definitely Europe impacted by the Ukrainian war and a slowdown of the industries, mainly in Germany. So less activity on rail, but compensated by the strong activity in India.
So if we look at the figures of this freight rail cars activity, we can see a stability of the indicator, the operating indicators. So the revenues from activities is quite stable, decreasing by 0.2 million euro, while the EBITDA is increasing by 700k euro, 0.7 million euro. In fact, as explained Fabrice, so we do have compensated India, our growth in India by a decrease in Europe. There has been also the end of a maintenance contract, so ancillary activities, as I explained just before. So that's why we had a decrease in the own activity. But this has been compensated by the growth in the management activity. Because it was quite dynamic, as I explained before, for management. In terms of EBITDA, so we have an increase in EBITDA because we do have lower operating expenses related to maintenance and repairs. We do manage very carefully maintenance and repairs. We put IoT, Internet of Things, into the rail cars that help us to do good repairs or proactive repairs and maintenance and lower these operating expenses. We do have also some cost of sales and general and administrative expenses that was increasing in the expenses.
So now we have the river barge activity. So 107 barges in 2024. As you see here, quite a young fleet, 15 years old. Those barges are mostly, also in the most standardized category, which is a dry bulk hopper barges. So we did transport, for example, in 24, biomass, grain, iron ore, earth. We worked a lot on the Seine River on those metro lines, under construction. They call it, it's a major infrastructure project in Europe, by the way, and also transporting sand and gravel. It's a good, 55% in Europe, 45% in the Americas. Good visibility for the cash flows, 5 years of contract, as you see here, and also very good utilization rate, 97.9%, in fact, in this year.
So if we look at the figures here in the river barges activity, we can see net increase in operating profitability, where the revenues are quite stable. So interesting. In fact, in the revenue, as I said again, there is an ancillary activities, which is chartering on the Rhine Basin, and the chartering has declined by 2.6 million. But there was this dynamic management activity where we have done some syndication and increased by 2.7 million euro. Chartering, it's a very low margin, where management activity, as I explained, it's a net of expenses, so it's I would say 100% margin. That's why, in fact, the operating EBITDA is up by 1.6 million. Where in fact the revenues are very stable. So strong performance of the management activity in the river barges.
Then we have the third activity, which is container leasing. Here we have also a fleet which is really in the most standardized category, which are the dry containers. 95% of the fleet is dry containers, 5% reefer containers. It's a young fleet also for the owned fleet with 5.2 years in average. It was a quite active year, as I said. We worked a lot with companies like Evergreen, Hapag-Lloyd, or CMS EGM in 24. Good visibility for the cash flows. We have a 97% of utilization rate, and also 6.2 years of contract ahead of us. I have also to say that the trading activity, which is an activity alongside the leasing activity, did perform well in 24 with 49,000 containers sold. Some of them were new or almost new, and some of them were, of course, second-hand at the end of the leasing contracts.
So for the figures of the containers, we can see an increase of business volume. There has been an increase in sales, 2.8 million of trading. There has been also some good numbers in leasing with a high average utilization rate, as explained by Fabrice. Management activity was also good, but in fact, we've seen a decrease in the operating EBITDA Why? Because in fact there was this bankruptcy, and we have taken some provision and depreciation of assets for 3.3 million euros. So out of this, I would say bankruptcy, or exceptional item, activity was quite performing also in containers for this year. So this is for the three activities, transportation activity. So there is a residual modular building activity. I said that effectively, when you see the breakdown, this residual activity was also good volume of sales. But there is also the fourth or the fifth activity in the group, which is the asset management. So I let Fabrice just speak about that activity, which was very dynamic last year.
Thank you, Thierry. Indeed, we see a growing demand from investors to invest in real assets related to transportation infrastructure. So as I remind you, so 1.3 billion under management, including 46% managed on behalf of those investors. Why they do invest alongside us? Because for them, it's a good diversification strategy compared to financial markets. Investing in real assets is also a very good hedge against inflation. The yield, are also very, recurrent with quite a low volatility. In fact, over the past 25 years, we have a track record of between 8 and 9% return for our investors with a 5% volatility. So it's quite attractive for people who likes those kind of returns with such low volatility. And also a way for investors, and especially pension funds or long-term investors, to invest in real assets which are linked to sustainable transport. For Touax, it's quite interesting to have that activity alongside the investments on our balance sheets, because it's additional EBITDA to our additional revenues to our EBITDA as an owner and lessor. We do not guarantee any returns to the investors. So there is a pure alignment of interest, because of course we always co-invest alongside our investors. On the next page, you see so today, in fact, that asset management activity, we have 38 investors, and we can offer today really, there are two ways to co-invest with us. First way, it was requested by our investors almost 10 years ago. It is through a fund. So we have a first open-ended funds. So it's a SICAV in Luxembourg, very traditional structure. They have an ISIN code, and they can buy shares of a fund investing in those real assets. So today you have one named Real Assets Income Fund. Touax is the exclusive operator for the assets for that fund, and it's 180 million euros under management. The depository bank is Socgen, and the AIFM manager is Lemanik. And then you have another platform, CETEF, which is more typical as a structure. It's also a SICAV in Luxembourg, a fund in Luxembourg, but they are a closed-end fund, so it's a 10 years plus 2. And here, Touax is for 70% of the volume, the exclusive operator. On the direct side, you have a lot of investors who prefer to invest directly because they have more staff, more skills inside their teams, and very happy to manage the complexity of investing in real assets. But it's completely doable. And here we have 10 investors for, in fact, almost 80% of the volume today. So they co-invest directly with us in projects. Outlook for first in 2024, so we did almost 100 million euros of transactions, and 25 we already have 110 million euros in the pipeline, so active discussions with for almost all of it already committed funds.
So if we look now on the balance sheet, so we do have seen all the profit and loss statement. Quick word on the balance sheet. Here we do present an economical balance sheet. You will have in the appendix the I would say accounting balance sheet. Economical, much more understandable, where we do present in assets all the non-current assets and inventories. Non-current assets and inventories, that means rail cars, containers, river barges. There is some goodwill and intangible, but only 8 million of goodwill and intangible, so very, very small intangible assets. So it's mostly tangible assets, and this is financed by shareholders' equity and debt, net debt. The working capital is, I would say, negative, or it's a resource. So we do not finance debt by, or we do not finance working capital by debt. Debt is financing only the assets. So we have a level of, I would say, debt, which is normal for a lessor, where we do own tangible assets with very good residual value, very long useful life, which are leased on a long-term lease. So it's a normal and standard, I would say, financial position we do have here. So if we look at the debt profile now, so in net debt, so we said about 300 million of debt, which is in fact cash and gross debt, so 353 million of gross debt. So in gross debt, so you do have non-recourse debt and recourse debt. So non-recourse, that means that there is no guarantee by the mother company Touax SCA, so it's debt that is guaranteed only by assets. And you can see the breakdown of the different sources. So 74% of this debt are financed, are secured by assets, where there is other financing and corporate financing for 15% and debt capital market for 11%. In terms of rate, the overall weighted interest rate at the date of the 31st December 2024. So it's not an average for the year, it's really the last day of the year. It was a 5.43%. And we compare this to the last day of last year, which was 5 to 69%. So we see here a small decrease coming for the interest rate and for the interest charges. In terms of credit profile, so we do care about the financial ratio very proactively. We do look at the loan to value because, as we say, we do finance assets, so it's very important to have a low loan to value. So we do have a 60% loan to value, which is very good for a lessor like we are with a lot of tangible assets. Interest coverage ratio is 2.8. Good interest coverage ratio also. In terms of maturity schedule, so we do own asset where the useful life, as presented by Fabrice, is almost 40 years. For sure, we do not finance with debt which are a term of 40 years. So normally, the term of the debt, the duration of the debt is 4 to 6 years with balloon on our bullet, and we do refinance all this debt all over the years. So which is important to be able to refinance the debt is to have a good loan to value. So what we have, tangible asset with good residual value. So what we have, and long-term lease because we do want recurring revenue. So this is what we have. So in terms of maturity schedule, we do have to refinance this year 172 million. In fact, it's only there is some amortization. So it's the freight railcars division for 150 million, about million euro in 2025. In 2026, it will be the containers division, 63 million euro for containers division. And in 2027, it will be the corporate, where we have the club deal and a Euro PP bond that will be refinanced in 2027. For sure, by the end of 2025, we will see the refinancing of railway cars, which will come maybe in 23 or something like that later, because again, we will refinance for 4 to 6 years. Last word for the figures, which is one very important because it's a cash and cash is king. We do present here the cash flow statement. There is an increase in of cash of 9.9 million euro. In fact, there has been a cutoff for change in operating working capital for about the same amount by the end of the year. So I would say that the cash was quite stable if we retreat that cutoff by the end of the year. So here in the operating in the cash flow, you can see that there is no investment flows, or almost no investment flows, because as a lessor, we do present all the investment, all the purchase of equipment in operating flows. So to be more transparent and to understand better, so we do break down the operating flows in operating flows, which is the EBITDA, more or less. So 55 million euro in 2024, up from 50 million euro, 49 million euro in 2023. We've seen an increase in EBITDA. We see an increase in cash operating flows. And the purchase of equipment and inventories, because the equipment are in fixed assets or in inventories, so purchase. And it's a net purchase, so it's what we purchased minus what we disposed, what we sold. Something very interesting here is that operating flows are quite stable, recurring cash flows because we do lease assets, but it comes from the market. If the market is down, it could be it could decrease. Where the net purchase of equipment, it's in our hand. So that means that if the market is decreasing, we always have the possibility to stop to invest and to keep our cash and to manage our cash to reimburse debt. So which is one level very interesting in our activity, which is in our hand. Investment flows, as I say, is nil because everything is in operating flows. And then we do have the financing flows, so which is negative here, minus 5.5 million. So financing flows record the debt, the variation of debt. So new debt minus amortization of debt, interest charges for sure, as some distribution. So finally, the cash here, we finish with a positive cash, but as I said, it's quite stable if we retreat the working capital. So let's speak about the outlook now.
Thank you, Thierry. So business outlook. Let's start with the railcar leasing activity. Quite a good outlook. You know, here we have a forecast to grow our fleet to 16,000 wagons within the next 5 years. When you look at the markets, in fact, you have one negative aspect today, which is the weakness of the European market. Again, because of the Ukrainian war, inflation, high cost of energy, industries were impacted, and we see a lower level of transportation by rail, especially in intermodal traffic. If you look at the midterm or even long term, you have in fact 4 very positive factors. First one, this market is more and more for the private sector. You know, today the leasing companies are financing 75% of all the purchases of new wagons in Europe. This is very big. The market share in the hand of private investors is only 38% today. All the rest is owned by the state-owned railways still today. But you see what is the potential for the next years. Second positive effect is a green agenda, of course, a strong support from Europe to finally build a very big network and do the model shift from road to rail. And also, if you look to Europe, here we name finally, probably for some of them because of the Ukrainian war, but Europe is investing billions in the rail infrastructure. I just wanted for today to highlight 5 projects which are quite major for Europe. Lyon, Torino, it's something which started already a few years ago, but this is a 57-kilometers tunnel below the Alps. And by 2030, probably a little bit even earlier, there will be 344 trains instead of 37. So we will multiply by 9 the traffic on this line. It is huge, so there will be more wagons needed. Then you have all the Baltic countries, very afraid to be connected to Russia with a gauge which is not the standard gauge of Europe. It's 1.6 meters wide in Russia, 1.4 meters wide, in Europe. And you have the Rail Baltica project, 870 kilometers new railway line, which will be connected to Europe in 2028. Again, a lot of new equipment needed for that. Then you have a major project which is not known very much, but this is a tunnel below the sea, below the Baltic Sea. This is a project named Fehmarn Belt, 18 kilometers of tunnel, and it will link Germany and Denmark. And why doing that? Because it will allow Finland, Sweden, but also Finland, to be connected also to the European network. And Finland, as you know, was mostly connected to the Russian market before. Again, a major development. Rail is very good for long distance traffic, and those additional network will be a good news. You have also, of course, on Ukrainian side, only Touax is aware of 10 projects of terminals in Ukraine to be built at the end of the war to connect inland terminals in Ukraine with the European network. So that's, of course, very positive. And also one other element which is positive is our I would say positioning in India. As you know, India is performing well today with around 6.5% GDP growth expected for next year. So what is our ambition in this market? Continue, offering our leasing services to our customers. We will continue also to innovate. Almost all our wagons are equipped now with IoT, so it's GPS devices, and you can offer a lot of services to your customers, but you can reduce your cost because we do organize now the mileage, so the maintenance, which is mileage based and not on time based. We will also continue to look for opportunities to increase the fleet, so it's mostly organic growth with the help of our financial partners, so mostly infrastructure funds. We will look also to opportunities to buy existing fleets, probably in Europe. There will be some sell and lease back opportunities, and of course continue growing India. For river barges, what is the forecast? Forecast is to grow the fleet from 107 barges to 150 barges in the next 5 years. Same analysis. When you look at the markets, you have one neutral aspect of the market today is climate change. Indeed, certain conditions of navigability are not perfect when you have low water levels or high water levels. However, it does impact only a small part of the rivers, in South America and on the Danube River mainly, and also for in certain cases, clients are looking for additional equipment with a lower draft to be able to operate their vessels fully loaded, even when you have a low water level. However, when you look at the other elements, quite positive. Again, there is a strong market for transporting grain or all energy-related raw materials. Transportation on rivers is also a low-carbon transport method, so highly supported by Europe. And also we are very pleased to be also in the Americas, where there could be some opportunities, especially in the trade wars of today, with suddenly, probably a higher demand for grain coming from South America, going to Asia. So what is our ambition today? Again, mostly organic growth, so increase our fleet under management, owned, so on our balance sheet, but also managed on behalf of third-party investors. By the way, that management on behalf of third parties, we started it mainly last year. It was already done a lot in the rail segment and container segment, but we will continue to do it much more also on the river segment. We will mostly focus on the European market because you have a lot of aggregates, biomass, grain, or to transport. But again, as I said, look at all the opportunities we could see in the next months in the US or South America. Outlook for container business. Geopolitical uncertainties. That's for sure. When you look at the market situation, something important. We have two wars. we have a major trade discussions and disruptions. Those events will have an impact. We don't know if it will be positive or negative. It's unbelievable. I can tell you that it's first time over the past 30 years that we see the top 3 of our customers in the shipping lines, among the shipping lines, they have 3 budgets. And the 3 budgets for 25 is whether or not the Canal of Suez will reopen on January 1st, June 25, or December 25. So you see how, and it could be billions for them of revenues lost or gained. So it's quite unpredictable. What, however, we can say is that in our business, which is a long-term lease of containers, which is highly standardized, we are not in the spot market. We are in the long-term lease, and we have a very good visibility on our cash flows with more than 6 years of duration of contracts, 96% of utilization rate. What we also see is that despite those wars and trade disruptions, in fact, in 25, Clarkson, which is one of the main experts following cargo movements, expect a 2.9% growth worldwide. Not that bad. But even when you look at WTO, so the World Trade Organization, they say plus 3% in 2025. And for them, 2 reasons: lower inflation and lower cost of energy, which will favor transport. So again, quite difficult to predict anything, but our ambition remains the same. We want to grow anyway, extend our customer portfolios, increase our fleet, either owned or managed, increase also the activity of trading containers. By the way, for the almost new containers, we rent only for 3 months or 6 months, and we sell. That activity, we target to increase it from 12 to 25,000 containers per year. And continue developing, again, the fleet with the help of our third-party investors. So to summarize, outlook for the group is quite positive. Again, we are in a long-term business, investing in assets, so very resilient and recurrent cash flows. We see also that the support of our customers is very strong. They all of them want to support a greener transport. In fact, 30% of the CO2 emissions worldwide are coming from the transportation activity. So I can tell you, all the industrial customers, they like, to use a mode of transport which are much greener. So we help them to reach their goals, and a strong demand coming from that. We see a continuous expansion of the infrastructure and the e-commerce. We see also more and more outsourcing trends because of a liberalization, as I said, for example, in the rail sector, and also a strong support from our investors, which will help us to continue to finance the growth. So the group ambition is again to continue investing, our free cash flows in those assets, adding those capacity to our existing fleet, and target very regular shareholders value creation of around 10% per year. In fact, it's a very good transition for the next part, which is on shareholders performance. So shareholders performance, what we wanted to tell you today is in fact a track record of 5 years. Why 5 years? Because you remember we sold 6 years ago, in fact, the activity of manufacturing and leasing of modular buildings in order to refocus our strategy into the long-term investments of transportation assets, so long-term investments and leasing of transportation assets. And it was good to do a kind of, okay, let's look back and see what has been the performance for the shareholders over those 5 years. In fact, the performance, if you look at a very simple metrics, which is the increase in net book value per share, you see that it has increased from 6.79 euros per share to 11.63 euros per share. And then you add to that value creation what has been distributed as dividends. So it did increase from 10 cents to 15 cents. So 50 cents is what we will propose to the next General Assembly. If you look at that, track record is 12% in average, which is in fact our target, to be above 10% of value creation. The multiple on invested capital would have been, for someone investing with us in 2019, 1.79. Just in information for today also, when you look at those of this graph, you see an acceleration between 2019 and 20. It is because of the entry of an infrastructure fund at fair market value at the level of one of our subsidiary Touax Rail, and it did recognize there some increase in value, simply because there were some capital gains, potential capital gains on the activity. So it was a normal value. And here you have that increase. But you see also a decline in the value in 23. This is when we did purchase the minority position of a shareholder in the modular building activity remaining in Africa. And then we had to take into account all the losses of the past when we did it. It's a very good move, but it was a temporary impact on the net book value per share. But again, in average, a 12% growth. Some investors will see that we don't publish any more information concerning the potential capital gains we have on our equipment. In fact, we decided not to focus too much on it, because for a lessor with a strategy was to keep its assets on the very long term and to target the leasing yields, we will not sell those assets the next day. So it was probably not the best tool to track performance, and that's why we will mostly rely now on the net book value per share to follow that shareholders' performance. On the next page, you have also an analysis on the stock exchange. So still a big discount on the stock exchange, with a 68% discount on the book compared to book price. But very positive in terms of message today for our shareholders. So we will present to the next shareholders meeting a resolution to approve a dividend of 15 cents per share, so which will be an increase of 25% compared to last year. It's 27% of the net result of the group, which will be distributed to the shareholders. Thank you again to all of you, and I'll let you now ask any questions.
Yes, Fabrice, thank you. We've got a few questions. First one is more focused on Germany and Europe. What is the impact for your business? What do you expect from the large German infrastructure and defense package, what we call the German bazooka?
You're right. I did not mention it, but it could have been mentioned. We don't have the analysis yet where that money will be deployed, but it's extremely good news anyway for our sector, because Germany, as you saw, it's a 500 billion euros fund to invest mostly in infrastructure. Of course, part of it will go to defense, but a big part also will go to the rail, to build that those railway lines to build a better Europe with a higher capacity to transport cargo. So we see it as a very, in fact, positive move and good decision of Germany to support the infrastructure.
Thank you. Another question. It was mentioned the Internet of Things regarding rail cars. Could you please indicate from which company do you buy this technology? A few names are given: Contron, Sycor, other. What are your suppliers for these IT tools?
Okay. We work with two companies today: Savvy, the German entity, and Nexiot. Both are very good, I would say. It's becoming more and more standardized. So but again, it's a very good tool. I give you a few examples of services we can provide to our customers. Sometimes they were receiving messages in factories: the train is arriving, and then everybody was ready to unload the train. but the train was arriving an hour late, and then you lose an hour of work for the people. It's as simply as that. So today they have a geofencing services. They know 5 minutes before the train arrives, and they know it's real, and they are informed on time. And by the way, they can check it on internet. You know, it's really a good service. But also for us, it's a predictive maintenance. It's nice because you have a lot of you know, sensors also on the wagons, so you can analyze things. You can understand better when you have an accident or a problem, and also you can track mileage. And as you know, for maintenance, tracking mileage is extremely important. So yeah, very pleased to do that. So for the rail business, for your information, almost all the lessors have decided to deploy that technology. It's not yet the case for containers. Huh? So for containers, it's starting mostly for tank containers and reefer containers, because they have to track the temperature. But for dry containers, it's really the start. I think it will be deployed over the next 10 years at the end.
Thank you, Fabrice. A question regarding international trade. The introduction of tariffs, US tariffs, will they impact the volume of transport? And if you know, for how much?
It will impact. We don't know if it will be positive or negative. It's unbelievable. I give you a few examples. When you have a trade between US and China, it's highly efficient. We do that for 20 years. And you have you need 1.2 containers to do a trade. So it means that one container is on board of a ship, and then you need a 0.2 container, just the time you need to unload, reload, and then go back on a ship. It's extremely efficient. When we do China, Thailand, Vietnam, Malaysia, US, you end needing 3 containers for the same traffic. It's unbelievable. You have disruptions could be bad if, of course, at the end of the day you have lower, if the trade is declining, like in 2009, or if you have a declining trade. But as I said, we in fact, the forecast we have today is not a declining trade. At the end, a lot of analysts, experts, whatever, are calling it a reglobalization. It's not a deglobalization, but a reglobalization. We invent something else. We will work more with France. We will complexify the logistic routes, but at the end, we will still trade. We will still do business, but it will be, maybe with France. But at the end, we will still need logistics and assets. So again, very difficult to analyze, but so far so good.
Thank you. Very clear. So for the moment, we do not have any more questions.
So thank you to everyone, and as always, don't hesitate to ask questions after the call to us directly, as you do. Thank you.
Thank you. Bye.